Every year, homeowners across Metro Vancouver open up their property assessment and immediately think one of two things. Either, great, my home is worth more than I thought, or there's no way this is accurate. But here's the problem with that thinking. Neither reaction actually tells you what your home is worth on the market today. And today, I'm going to explain exactly why. I'm going to show you some real examples, homes that are currently on the market right now that are listed the same, but their BC assessments are quite a bit different. We're going to walk through the reasons for that. But before we get into that, guys, my name again is Ryan McMillan, a local real estate agent here in Vancouver. I help people buy and sell homes. If you're interested in the buying or selling process and you want to get a little more information, make sure you go down and book a call with me. QR codes right here on the screen. Also, all my links are in the description. Also, if you haven't done so yet and you've been watching the channel, you like what you've been seeing, make sure you go down right here, subscribe to the channel. Also, share the videos to anybody else that you're thinking that this information might be useful for them as well. So let's waste no more time. Let's get into talking BC assessments. So first, let's talk about what property assessments are actually for. We all heard about BC assessments, but what are they actually for? First, we need to clear up a massive misconception. Property assessments exist for taxation, not the pricing of your home. BC assessment's job is to make sure similar homes are assessed relatively fairly so municipalities can distribute property taxes evenly. And basically that's it. They're not trying to predict buyer demand, capture emotional value, or adjust quickly to market shifts, or also tell you what your home would sell for right now. Assessments also, you got to remember, they're based on a snapshot in time. It goes back, once you get in the new year, these were from July 1st of the previous year, again, using mass appraisal models. So right away, you have a timing issue and you have a modeling issue. So before we even talk about renovations, layouts, and even buyer psychology, let's talk about why people confuse assessments with value. So why do people confuse assessments with market value? Because it's really the only official number they're given without, reaching out to a realtor and really getting a real tight home evaluation. There's no annual letter that says, here's what buyers might pay for your home this year. So people just psychologically, they anchor themselves to the assessment, even though it was never designed for that purpose. And that anchoring causes real problems when people are buying, selling, or starting to negotiate. So let me show you what this looks like in the real world. So I pulled 3 examples up, similar lot sizes, but very different homes, and their assessments are quite a bit different. But then when we talk about what they're actually listed at, we're going to get into the deeper. So on paper, these homes, they're quite a bit different BC assessment wise, right? If assessments told the full story, these homes should trade for, roughly the price they're assessed at, I guess, if you would look at it like this, but that's not the case. So we're going to look at, I'm going to show you the 3 assessments, then I'm going to break down the pricing. So 5760 Kerr Street, Vancouver, total BC assessed value as of July 1st, 2025, right? Talking about 6 months prior, just over 1.9. So these are a couple homes, all in Vancouver, little, different neighborhood pockets, but, again, similar. Here's 1636 Francis Street in Vancouver, total assessed BC assessment 1666. And you look at the previous year, gives you an idea too how BC assessments have really dropped. Now, has the market dropped? Yes, but these assessments have really dropped. Previous year value 1862. That's over $200,000 drop in your assessment value. And finally, we got 1518 37th Avenue in East Van. And this total value was assessed at 1589. You see the previous year, again, throws you off a little bit, right? Because the previous year, this was valued at 1676. So these 2 last homes, one was devalued assessment wise over 200, this under 100,000. So again, why do they do it like that, right? Again, if you were going to compare this to, market value, right? Well, what is that saying, right? So if you look at these 3 assessments, quite a bit different in the BC assessment. So you're saying, well, why are you showing us this? These are completely different, off by, 350,000. Well, we look at Kerr, 5760 Kerr, listed currently at 1899. We look at 1636 Francis Street, currently listed at 1899. and we go to 1518 East 37th, currently listed at 1899. So wait a second, one's close to the assessment, one is completely off. 1.9 assessed under 1.6. How can that be? Well, like I mentioned earlier, BC assessment doesn't what it is like. It's for taxation purposes, tries to make it equal across the board of what you owe tax wise, but it differs in the market completely. Now you look at this. We'll start with 1518 East 37th, built in the 60s, but completely renovated, right? Mid-century modern, beautifully done. Now this is going to be maybe more for a specific buyer at this point, somebody that likes the mid-century modern vibe, likes the 1960s split level, but you see the woodwork and the teak and the millwork, beautifully done home. You see all this detail. It's a beautiful home, but again, you go down to the description, it's talking about renowned furniture designer Christian Wu. You talk about designer, right? So again, adding value to this home that, again, a BC assessment, A, would have no idea about, and B, doesn't matter to them, right? So that's the difference. And then when you pull up the Kerr house that was exactly the same price in the market, assessed at 1.9, let me pull this up here, go through some of the photos. Now this is something built late 90s, 2000, and it's pretty much as is, right? So, you're going to have a little bigger square footage. It's a little newer home. But again, pretty cookie cutter, probably something very similar comp wise in the neighborhood. And that's what they're going to go off of, right? So even though their assessment's similar, again, no bearing at all. And you see the differences, and again, this is going to be somebody that has a certain taste as well. A lot of people don't want anything to do with a house in this era, for several different reasons. And then we would go to our last one. This house was built in, we're looking 110, 15 years ago. But again, you're thinking, well, okay, how is it priced the same? Again, fully renovated, updates, beautifully done kitchen, open concept. Looks like there's still a little bit of work to be had here. Similar size lots. So completely 3 different homes, priced exactly the same. BC assessments, all different. So different assessment ranges and very similar pricing strategies. This is usually where people say one of these sellers must be crazy. But the market doesn't price homes randomly. And the reasons these homes are treated differently don't show up clearly on an assessment notice. So why the market treats them differently, and we've sort of discussed this, guys, but here's what assessments don't fully capture. And I gave you these examples. We walked you through them. Renovations, quality, layout, functionality, street traffic and noise, natural light, maybe they have a legal suite, ceiling heights, buyer emotion, right? Something like that mid-century modern that can really attach onto a buyer's emotion, right? Assessment model doesn't walk through a home. Buyers do. Buyers don't calculate value. They feel it, they compare it, and they negotiate. So let's talk about the biggest seller and buyer mistakes when it comes to BC assessments. This is where I see people get burned the most, okay? Seller mistake, anchoring to the assessment, right? The biggest seller mistake is anchoring emotionally to the BC assessment. Homeowners say things like our assessment is 1.6, so we should be able to get 1.7 or 1.8. But that logic assumes the assessment is a pricing foundation, right? Which, like we've discussed, it's completely not. And when sellers anchor to it, they just stop listening to the market altogether. The seller mistake number 2 I see is ignoring buyer choice. Sellers, they don't compete against assessments. They compete against every other option a buyer has. In this market, it is a lot. Buyers don't care what your assessment says. They don't. They care what else they can buy for the same money, okay? And in markets with more inventory, like we're seeing right now, buyers start becoming ruthless with comparisons. If your home doesn't clearly stand out, they move on. So let's talk about the third seller mistake, and that's pricing for the past. Assessments are backward looking. Markets are forward looking, right? If interest rates change, inventory increases, or buyer sentiment shifts, assessments won't reflect that until much later. But the market reacts now. Sellers who ignore that gap end up just chasing down the market, classic, instead of leading it. Okay. And the fourth seller mistake I see is thinking a high assessment is some sort of safety net. Some sellers believe a high assessment, well, that's going to protect me, right? They think even if it doesn't sell, right, at least the value is there. But the market doesn't reward any kind of optimism, guys. It rewards alignment, okay? A home that sits too long, right? You know, the whole becomes a question mark, not a premium, right? So think about those four things. Let's shift to buyer mistakes. Using assessment as a fairness test, right? So buyers make mistakes too. And one of the biggest is treating assessments as a fairness test. So what I mean by that, they assume anything priced above assessment is overpriced. And anything below, well, it's a pretty good deal. But assessments, again, they don't measure demand. And demand is what moves pricing. Okay, now buyer mistake number two, waiting for the assessments to catch up, right? So in softer shifting markets, some buyers wait for assessments to reflect reality. But by the time they do, the opportunity a lot of times, it's gone, right? The best buying windows usually happen when the market is changing, not when it feels obvious. And the third buyer mistake is confusing negotiation power with value. So just because you can negotiate doesn't mean the home isn't worth the price, right? And just because a seller is motivated, it doesn't mean the property lacks demand. So smart buyers, right, what they're going to do is separate opportunity from emotion. So the common thread, guys, in all of this is both buyers and sellers, they make the same mistake, right? They look for certainty in a number that was never meant to provide it at all. Okay, the market doesn't operate on formulas. It operates on behavior, timing, and perception. Okay, so at the end of the day, here's my final takeaway from all this. Okay, BC assessment isn't wrong. It's just solving a different problem than pricing your home. So if you want to know what your home is actually worth in today's market, you need real sales data, not tax math. Okay. So guys, do me a favor, go down the comment section, comment, compare, or value. I'll show you how buyers are actually valuing homes like yours right now. Again, if you've made it this far in the video, appreciate you watching to the end, guys. And if you're looking to figure out maybe what your home might be worth and you really want a home evaluation, reach out to me. We can jump on a call and we can walk you through what that's going to look like. Again, guys, if you've been liking what you're seeing, riding with the channel, make sure you go down, subscribe to the channel, share the videos, all that good stuff helps out the channel, and appreciate you guys again. Until the next video, we'll see you later.